Len, thank you. That was fabulous. And Matt, thanks. Great questions. I agree. Now, may sound boring to you, but we're going to talk about accounting practices. It's not boring, it's important to know. And Matt, I'm hoping you're going to tell us that 280E's been repealed or what you're doing about that. So I welcome to the stage a very talented group, John Pellitteri. Come on up, John, who's with Grassi. I'll introduce them as they come up. John is the managing partner of Grassi, which is a very long-standing New York-based financial services firm. And John himself has more than 25 years as a finance professional. Elena Marvine. Here's Elena. Elena's an MD with Cohn Resnick, and she's in their Miami office. And she has a wide practice in the financial services world, but was smart enough to realize that she needed to build a practice around cannabis for her firm. And Jill Scher, thank you for being here, with Markham, a partner with Markham in the New York office. Jill is an expert on tax strategies, and we know we need experts on tax strategies, and serves her clients also with great knowledge around cannabis because she knew to build that practice for the wonderful firm of Marcus. Matt, take it away with these very smart and connected people on what's going on that we need to know.
This is where all the fun starts now, and thank you, everybody. So I thought I'd have each of you introduce yourselves, and we'll start with you, John.
Sure. Hello. Good afternoon, everyone. John Pellitteri. I'm a partner in charge of the healthcare and cannabis service practice at Grassi Advisors, which is a national accounting firm, top 50. I started the cannabis practice 6 years ago, sort of an outgrowth of where healthcare was going. Currently, we represent multi-state operators, single-state operators, funds, equity debt funds. Currently working a lot in the application space and the public company space and a lot of the mergers and acquisitions that are happening. We're advising on both sides. Gary, thank you very much for putting this wonderful program together. It's an honor to be here, and I look forward to the informative dialogue with my colleagues. Thank you.
All right, thank you. My name is Jill Scher, and I'm really excited to be here. Thank you, Gary, and thank you, Cannabis Expo. I'm a partner at Markham LLP based in New York, and I focus in the tax area. And I've been in the cannabis industry now for a couple of years. Markham has been in the cannabis industry back since the days when Colorado and California went legal, and we've been a pioneer in the industry since then. We have a very large army, I would call it, of professionals that are dedicated to the field. An entire cannabis group that focuses on startup companies all the way through taking companies public and servicing public companies. Also, we're involved in the application process and do some other advisory work and technological services for them too, the back-end software, setting up their chart of accounts and things like that. I'm so happy to be here, and if there's one thing that I want you guys to take away from this panel that we have here today is that the accounting and the tax associated with this industry is tough, and it's very important that you understand either as an investor or as an industry person that you have to have the right information. That's a lot of technical knowledge that's very, very complex, and it could be very confusing. Having the right advisors by your side is very important.
Hi, my name is Elena Marvine, and I'm a Managing Director of Transaction Advisory Practice at Cohn Resnick. Cohn Resnick LLP is one of the top national accounting tax advisory firms. We have about 3,000 employees in 30 offices nationwide. So at Cohn Resnick, since 2018, we have built a large and dedicated group of dedicated to cannabis space to bring, the idea was to bring the range of services, audit, tax, valuations, advisory to the field. The group that I reside in is transaction advisory, and we are the practice that performs due diligence, quality of earnings for buyers, sellers, and lenders. We worked on about 700 transactions last year. about 50-50 split between buy side and sell side, and we represent usually strategic, in the context of cannabis would be multi-state operators, private equity funds, and family offices and lenders. And I echo what Cheryl said, what Jill said. It's very tough industry, accounting, for the industry, accounting, tax, and there is not enough professionals, so you definitely seek the professional help. And if we can encourage you to do that early, and especially in my case, what I see early before you contemplate a transaction or any kind of a liquidity event, you will be ahead of many other companies.
So in terms of the industry, where we are right now, last year was about 25 billion. This year we're looking at about 28. New York, when New York's up. Jeez, what am I doing here? What's going on here? Okay. Yeah. Why don't I take? Well, no, I think we're okay now. So New York will be probably second or third to California when the markets mature. It's about, I think it's, we estimate about a $7 billion opportunity. So Jill, can you walk us through some of the things that are going on in New York now as the licenses, the window will be open for applications, and what's involved from the accounting world standpoint?
Sure. I'm going to do a very high-level overview. So as we all know, the law was passed back in 2021 to legalize adult use marijuana in the state. And since that time, there's been about 250 licenses granted so far for adult use cultivation, conditional cultivation. Just last week, they also granted about, I think it was about 15 licenses for adult use processors. And starting in a couple of days, on August 25th, the portal is going to open, and this is what everyone's been talking about with that $200 million fund. The adult use cannabis dispensary retail licenses will open. So some key things that I want to take away, and you can go on the OCM's website and look at a mock application that they put up there. And on the mock application, which is actually very good, you can click in and get definitions of what an eligible applicant is, and a whole bunch of other things that the other panels will really discuss today. What I want to bring up is that one of the key criteria to getting a license is that you have to have a qualified business experience, at least 2 years of running a profitable company. And what they ask, if you dive into the application and the nuances and details of it, is that you have to submit tax documents, financial statements, bank records. All of this goes in conjunction, has to be uploaded with the application. And it has to show also the ownership of the 2 year of the business. So it's very important that the applicants understand the nuances of the application, and that everything is submitted properly, and the financials and the information that you submit are accurate. There's going to be hundreds to thousands of applications that are submitted, and only 150 are going to be granted. If you want to have the edge and you want to get the license, it's very important that it's done in the best way possible. There's a scoring system.
Great. And Alana, could you talk about what you're seeing in the world of M&A? The trends, the recent trends.
Sure, I can give a brief high-level update what we see in the market and also what we see in our practice in terms of M&A activity. So just starting from last year have seen a great M&A boost, a rebound after COVID in M&A activity. That was great. However, your valuations were really underwhelming, and that carried on into 2022, even more exacerbated by bearish stock market. So you have what you get in 22 low valuations, and you get the significant, and I mean really significant drop in capital raises. So you have that's going on, and at the same time, what you have is debt really almost entirely replacing the volume and amount of the capital raises. At the same time, so there is also a correlation between capital raises and the M&A activity. So if you see a decline in one, you really see a decline in the other. So what's happening, it's really interesting what's happening right now. There is really that correlation a little bit broken. So you see a significant, almost 70% decline against last year in capital raises. However, the M&A activity is still robust. If there is a decline, it's no more than 10%, and we still have good run for the year. So it still continues. It's still robust. What else is going on? So we see it's not as exciting, but we still see market consolidation going on, and mostly exacerbated by the market expansion, which is exciting, with states like New York, New Jersey coming online and becoming operational, and Virginia becoming operational in 2022. So that should keep M&A activity robust and keep that going, especially in the large Northeast market. And maybe the last trend, what we see in our practice that I noticed recently, we see a consolidation of distressed cannabis assets, and that is something that I haven't seen in prior years. It's becoming, there are groups that are targeting their investments into these distressed cannabis assets.
Sure. And John, in terms of the audit function, so early on, there were very few, if any, really accounting firms, audit firms that would come in and audit a cannabis company because there's reputation risk. It was, remains fairly illegal, but over the years, there have been more and more accounting firms, larger accounting firms. As you go in and you conduct your audits, what are you finding? Are things really kind of up to speed, or are we still at a point where we have to really rely on the expertise of the auditing firms, and is there still a lot of hand-holding that's involved?
It's a great question, Matt. And in terms of the reputational risk, it's interesting because when I first wanted to get into the space in 2014, and my executive committee was dead set against it, and the same thing in 15. So I can relate to that. The skill set that we're seeing now, it has improved a little bit, but if we look at a big picture out there, accountants in this space are few and far between. We're one of the few that are in it. Qualified people to work in these facilities in a new industry, those are few and far between. So when we first went in, we would go into large multi-state operators, and I was mesmerized how these large multi-state operators, before they were going to go public, their accounting departments were one or two people. And I found it incredibly amazing, and really raised my antennas that this was going to be a problem, because you had a lot of complicated situations going on. They were doing deals in an illegal industry. They were spending money, and it was very concerning. So, back then I was, it was very difficult to get your hands around it because there weren't a lot of good quality people in it that knew it. Fast forward to the last couple of years, I think the industry's matured, as has the entire industry. But there still is not an abundance of qualified people, as Jill said, that finance people that really understand the space. And now, you're getting involved in different types of transactions. There's debt restructuring, there's equity transactions, there's new financial statement pronouncements. These are all things that the industry is going to need qualified people to understand on the inside. And what we try to do is we got to write a fine line. If we're auditing these statements, we can't be doing the work and fixing the work. So we kind of got to, a lot of times we'll bring in other firms to work with our clients to help them get everything in order. And a lot of times we just have high-level conversations to try to put them in the right spot. But it has stepped up, but it's not nearly where it should be. And as the industry continues to evolve, that is going to have to raise the bar, whether internally you find the right people or you work with firms like ours, because there's still going to be more and more complexity to this industry. And until federal legalization comes, these are all the things that we're going to have to deal with. So it's super important. Probably the most important part of your business is the finance, the infrastructure, the cash flow management. Your CFO is to me the life and heart of the company. So I strongly suggest you surround yourself with some good people.
I can remember the first facility I looked at, not as an auditor, but as an analyst. And I asked somebody who was supposedly in charge of doing something in the quote unquote accounting. And I said, well, really, who maintains the books here? And he said, what do you mean, like the library? And I said, no, not the library. Like, where's your accounting department?
Because early on, look, they weren't investing in their accounting department. The cash they were deploying was to buy other facilities, overpay for them, overpay for real estate, do deals in states they shouldn't have done. That's where their money was going. And unfortunately, the investing community wasn't asking too many questions. Everyone was so excited that this was going to be the next big gold rush. No one wanted to ask the right questions, and everyone was just turning their head, and inevitably that came back to bite everyone, and that's why, the market, although last couple of weeks we've had a nice little uptick, the market's been hammered for a lot of different reasons.
Sure. Now, switching to everybody's favorite topic, 280E, probably the most onerous aspect of operating in a business that's federally illegal. If you could just talk briefly about what 280 is, and also, how has the IRS really stepped in? Are they more aggressive now with their audits?
Sure.
If you could just comment on
Happy
that.
to take that, even though it's an unpleasant topic. So Section 280E, if anyone is unfamiliar with it, it's really a big burden for the cannabis industry. Basically, it says that if you're trafficking in an illegal business, for tax purposes, when you do your tax return, you have to take in all the receipts, even though it's illegal for federal purposes. You capture all your receipts, but the deductions, you really can't take any, with the exception of one deduction, which is cost of goods sold. So you can't deduct things like you can in any other industry, like rent, salaries, utilities, and things like that, unless those expenses specifically have to do with cost of goods sold. That means that for the cannabis industry, their effective tax rate is about 3 to 4 times higher than any other industry. So not only are you dealing with, the fact that it's illegal, you're dealing with all the regulatory issues and the higher cost of dealing with professionals and everything else you have to encounter, but your tax bill is tremendous. So to go into the second part of the question, IRS audits. So yeah, the IRS is going to focus on the cannabis industry. They, they get a lot of bang for their buck. I think I read an article once that for one IRS agent's hour of time in a regular industry, they get about $700. In the cannabis industry, it's about $2,800. They net from the time. So where is the IRS that is so severely understaffed going to put their people? They're going to put it in the cannabis industry. And they know that they're going to play with things like allocating more to cost of goods sold than really belongs there, or saying, yeah, we have a dispensary, but we're also selling T-shirts and we're also selling, other paraphernalia, and that has nothing to do with this, and separate out the businesses. All of these things have been challenged by the IRS, and the IRS is getting more and more aggressive with this, because they get so much more from their manpower time. So you have to be very careful in the area.
So, can you believe this? The government is recruiting more IRS agents than they are recruiting into the military.
That is true.
And they are also advising that IRS agents be armed. I don't know if you read that.
Yeah, of course.
That's
yeah.
crazy. That's saying something.
But they do say that they're not going to use all of the funds. There's going to be much more money dedicated to the IRS in this new act, but it's not going to be for all agents. It's going to be also to answer questions on the IRS helpline and things like that. So, apparently they're going to make the IRS more user-friendly.
Okay.
We shall see.
Maybe next year we'll get some IRS.
We've heard that before.
That was my accounting joke, by the way.
Oh, okay, great. Okay.
I didn't get a laugh.
So, Elena, from your perspective, when you go in and you're looking at these transactions, how focused are you on the liability, the tax liability? Because, clearly that's going to impact valuations. And so,
Yeah.
how do you get comfort around the tax. You
Yeah,
just pick up the
you
phone and
better
call your
believe
tax
we are.
department?
Yeah, we are focused on that, and so that's part. During the due diligence, there is a financial portion and there is a tax portions, and the 280E exposure, tax exposure, is one of the largest, focuses of the tax due diligence, and we recalculate. We do our own diligence to recalculate that 280E exposure for the buyer. If we're on the side of the buyer. So any underestimated liability can affect the transaction or the price, negotiated price. And also, what we're looking for, just wanted to mention that over these years, as Jill mentioned, IRS has been improving its guidance and has been successfully challenging any opposition to the contrary to its guidance, and various court wins kind of confirmed that. So as a result, the buyers and investors are less and less willing to share in any risk in a transaction related to tax, especially to 280E exposure. So as a result, I see the tools like escrows are used that are established, and they last up until the last relevant tax year is open to IRS audit.
And John, when what is really going on in the world of accounting for cannabis? Are there any things that are going to catch investors off guard? All of a sudden, they're going to say, okay, you have to account for whatever in a certain way.
Yeah.
And also, has the accounting for biological assets, is that something of the past? Do investors need to worry about that anymore? Because it was a big headache.
Sure. A couple of things. In terms of what to be concerned with in terms of financial statements and auditing, because the industry is so new, you have a lot of people that have a lot of different arrangements. There's a lot of ownership structures, very convoluted. Cash, banking is very difficult. Auditing cash is very difficult. A lot of times they'll have some shell bank accounts set up. They'll have one entity that banks legally and have many other small little companies that are using a different bank so we don't have to pay the fees. This industry, high growth, a lot of what we see is equity-based compensation, where you're giving away stock to employees, options, board of directors. The accounting for all these treatments is very different. It's very complicated, and there's not enough people internally at these companies that are well-versed and experienced in dealing with any of these, let alone in the cannabis industry. So, having your internal people understand the complexities, how they're going to affect the financial statements, very, very important, and working with qualified auditing firms that are ultimately going to be providing an opinion on those statements is really important, just so we could sort of guide your internal people on what the best approach is, what they should do, so we can come in and give a clean opinion. In terms of biological assets, for those that don't know, that's an international accounting standard under IAS 41. Basically what it says is the way you account for any plant or animal where you are selling it. There's different rules and different guidelines. As far as I don't see that changing at any point. U.S. Looks at it a little differently. We don't have to follow this what they call this biological assets or IAS 41 unless you have a relationship with a company up in Canada.
Great. Jill, when companies are paying their taxes, does that have to be are they actually taking suitcases of cash to the IRS? Or how is that?
Sometimes, which is true. But before I get into that, there's a couple of things I just want to mention that I neglected to before. Section 280E for federal purposes, New York State has done something wonderful. They decoupled from that. So that means that in the state of New York, you can deduct other expenses besides cost of goods sold. Everything that would normally be deducted for any other industry is deductible on the state tax return. And many states have done that. So New York State has made that decision. So that's good news also. And the other thing that's good news is that you have professionals that are there that can set up your chart of accounts and to capture things properly and do the right allocation to optimize what your tax burden is or make it as low as possible. So to answer your question, a lot of companies now, we know that, the Safe Banking Act has not passed, so, companies cannot, in this industry, cannot use the regular banking system, but credit unions bank this industry. And there's a lot of other ways that, have been creative methods that these companies can work. If they use a credit union, they can certainly pay their taxes with the credit union. If they're only operating in cash, and there's a large sum of money, yes, they do have to call the IRS Service Center and go over with a bag of cash, and the IRS agent will have to actually count it. So, that's a funny kind of nuance there. There's also something else that's interesting. Whenever a company collects more than $10,000, there's a form called 8300 that has to be filed, and if it's not filed within 15 days of the receipt, there's a $25,000 penalty. The penalties and it could be a civil or a criminal penalty also, depending on the level of non-compliance. So these are all really important things that a cannabis company needs to know when dealing with the nuances of operating in cash.
Sure. And Elena, transaction readiness and the impact on valuations. Do you want to talk
Sure.
about that?
Yeah, I can talk about M&A all day long, so but I won't. I promise.
Please do.
Yes. So M&A, mergers and acquisitions, really require a lot of planning. Going into contemplating transactional liquidity event, debt or equity raise, straight acquisition require planning and understanding deal dynamics, and very often, a team of professional advisors, and there are transaction pitfalls that ultimately lead to undervaluing your basically getting less value for your transaction than you could. So given that, I just kind of want to highlight the 3 rules going into transactions or contemplating, soon or in the next year and the next 5 years. What are the 3 rules of transaction readiness? Basically, the first rule number 1 for me is to not leave value on the table. Whatever you do not leave value on the table. And if you haven't done the professional analysis of your earnings, be sure that the buyer will do that. They will have the professional analysis of your company's earnings performed, and then that may result in issues unknown to you coming up, and ultimately to a retrade. If they find something that you were not prepared for, that can lead to retrade in a transaction. The next rule of mine is prepare. You can't be over-prepared for transaction. We often see inconsistent data provided to buyers, lenders in transactions, and one inconsistent set of data can undermine the entire trust and the entire financial statements as a whole. So remember that. And any appearance of management not knowing their business from financial standpoint can give buyer that advantage and put them really at advantage. And you don't want to do that. So the next one and the last one, pay attention to your key financial accounts. You're probably not going to get everything right, but you need to pay attention to your key financial accounts and make sure you get them right. And what are they? Obviously, your sales. Sales need to reconcile to something, point of sale, POS system reports, you have compliance reports, they need to reconcile to sales by customer, whatnot. Then you have your inventory. You need to get your inventory valuation methodology right. And even if you got that right, you need to start updating that on a monthly basis, preferably. And I often interview management, and this question comes up where they say, hey, my inventory and the balance sheet is not updated. And I'm asking them, where is your inventory? And then they say, well, it's in my brain. And so my biggest advice is take it off your brain and put it on a balance sheet and make sure it's updated.
Well, it's interesting about inventory because every industry has guidelines for shrinkage, and I don't mean the Seinfeld episode of shrinkage. I mean like inventory disappearing, and particularly in weed, hello, I
Yeah.
would think a lot of it's disappearing. So I don't know what the guidelines are, or if the industry has thought of, what would be an acceptable amount of shrinkage for.
Yeah, well, it's. I think it depends where you're at in your vertical chain and what is exactly do you have an obsolete. And recently, I talked to my client who is dispensary, and they say, well, we don't do any reserve because we actually able to return any expired products to the vendor. So and we're okay with that. We tested that, they update their inventory, they're fine. So we see improvement for some companies. And then the other cultivation companies, sometimes they do track it, and you can figure that out.